let's go ahead and reconcile our credit card statements for the month of May. Alright, here we go. Let's go ahead and go to reconcile. Make sure we select credit card, 21,100. Alright, 531. Good. Our ending, 545310. Good. Do we have finance charges? Yes, we do. $42.88. 531/2020. Interest. Again, once we click continue, we will book an accounting entry. So let's make sure we understand what's going on. So first of all, our credit card balance increases, right, when we incur finance charges because we don't pay them right away. So 21,100 account is credited and goes up. What else is happening? Well, our expenses on interest and finance charges go up as well. So they're debited right here, right? Expenses are increased when they're debited. So we debit 61,700 and we credit 21,100, right? So we're good on that. Let's go ahead and click continue. All right, so here we are. Let's go ahead and start reconciling transactions that we have. All right, here we are. Here we are. So far, so good. Let's see. Our objective is to get to 0, and now our payments right here. We have our payments. All right. And we also have our service fee right here, 42.88 right here. And we're at 0. All right, that's what we wanted, right? So we're going to click reconcile now. Write a check later. No, we don't want to write a check. We already paid that. We're going in the catch-up mode, so we're going to cancel. All right, display the reports. You can print those reports, attach them to your credit card statements for your records. Let's make sure our balances are correct. Okay, 545310, 545310, good. And then on the detailed, yep, the payments are correct. The charges are correct. We're good to go. This concludes reconciliation of our credit card account for the month of May. Okay, let's go ahead and reconcile our bank statements for the month of May. All right. Here we are. Let's make sure we select correct date. And everything here. Let's make sure we have our balance correct. 621341. Okay, do we have service charges? Yes, we do. We have $25 service charge. The date is correct. The account is correct. Okay. Again, once we click continue, we will book an accounting transaction. So let's make sure we understand that accounting transaction. What's happening here? Service charge, right? We're paying a service charge to our bank. What does it do to our bank account? Our bank account goes down, right? And we know that assets go down when they're credited. What else is happening? Our expense on bank service charges goes up, right? And expenses go up when they're debited. So here we are. Even though, again, it entered once right here, $25, it actually serves as a debit to 61,600 account, and it serves as a credit to 11,100 account right here. All right, let's click continue and move forward with our bank reconciliation. So we have some of our transactions booked. We have our $25 right here, so we're going to click that. All right, what else do we have? We have our checks, right? They're posted right here. We have those. Okay, and we have our credit card statement, right? So we can click those off. However, we're not done reconciling. We still have a difference, and that's because you can see that we have some transactions that we still have to book. All right, so let's go ahead and book our deposits first. Again, the wonderful feature of QuickBooks is that you don't have to exit the reconciliation in order to book additional transactions. So let's go ahead and make deposits. All right, so we're gonna cash sales first, right? So again, right here we have a situation where we enter amount once, but it serves as a debit and a credit to two different accounts. So what's happening? Our bank account is going up. Bank accounts go up when they're debited, right? Because it's an asset. All right. What else is happening? Our sales go up. Sales / revenue go up when they're credited. Right? So that's what we have right here. Again, even though we're entering amount just once, it is actually serving as a credit to our sales account right here, increasing it, and as a debit to our bank account right here, increasing it as well. So let's click Save and New. Continue with our reconciliation. Have another sale, right? Cash deposit from our cash sales. All right. 87531. Here we are. Very similar situation. We're still going to go through our debits and credits to make sure that we are consistent, right? So we know, again, even though we're entering it once, it is actually both a debit and a credit right here. All right, so we can go ahead and click New. All right, and book our next. Next, we have our merchant account sales, right? Those are the ones that our customers use credit cards to pay us. And the credit card processing company, our merchant account service, deposited to our bank account twice a month. Again, different merchant accounts have different arrangements. In our case, it's twice a month. So here we are. Again, the debits and credits behind this interface right here. We're going to go ahead and click on New and continue with that. All right, our next one is another cash deposit. All right, again, sales, cash sales. All right, cash, we're going to deposit that. All right, so again, very similar, but for consistency, I'm going to continue booking it. So what's going on here? Our bank account goes up, debited, our sales go up, credited. Good, good, everything looks good. Let's make sure our date is correct right here. All right. Save and New. By the way, this wonderful feature here allows us to double check that our previous entries were correct. Let's double check. So this one had a slightly different date, so let me make that correction. Very easy. Save and New, yes. All right, so we're good on that. Let's see what else. We have 20, 15, and 10. Yes, excellent. Save and New. And now we're going to book the cash, another cash deposit from 525. All right, here we are. We're going to book that one. Again, another cash sales. All right. Here we are. Again, very similar to the previous ones, but we're going to keep doing it just again to consistency. Our bank account balance is increased when we debit it. Our sales go up when we credit them, right? It's debits and credits equal to each other. We're good to go, right? Save and New. Dates are correct. All right, we're going to clear this one, and we have one more, and that's our merchant account. Alright, so merchant and sales. Alright, so again, pretty much just like the other transactions, but we're going to keep doing it for the sake of consistency. And again, practice makes it perfect, so this way you follow. Again, debits, credits are an agreement. And the debits, the credits behind this interface, right? So we're good to go. Everything good. Dates are good. Amounts are good. We're going to save and close this time and go back to our reconciliation. Again, the wonderful feature is that we don't have to exit reconciliation. We're still in it. And now we can reconcile our deposits. Right here, booking of the statement is a very typical procedure when we do catch-up bookkeeping. All right, here we are. All right. And we're done, right? So we're done, but we still have a difference. Why do we have a difference? Well, we have some more transactions that we need to book. And what do we have? We have merchant account fee. We're familiar with that one. That's what the merchant account processor, the bank in our case, charges us for processing those payments that, you know, we get right here, because they have to transfer the money from the customer's accounts to our accounts. So that's the fee they charge. And then we have some draws, right? So those are the money we take out of the business, right? So we transfer it to personal account and we took some out using our debit card. So let's go ahead and book those. We're going to book that using general journal entries interface, one of my favorite interfaces, because the debits and credits are right here. But we're still going to go ahead and do that to make sure that we are in the good understanding and we are consistent. So what's happening here when we take money out? Well, bank account goes down. We know that, right? So it has to be credited. And then the other one is our draw account, right? So that's our equity account. Equity accounts go down when they're debited, right? So that's what's happening here. Money is leaving the business, we're taking it out, and we're not using it for business purposes. So our equity is reduced and our balance in our bank account is reduced. So let's go ahead and take a look. What's happening here? Bank is going down, equity is going down. So that's what we have here, right? Save and new. All right, we have another draw. This time it's an ATM card, 350. So again, very much identical process. Bank account is reduced through credits. Equity is reduced through debits. Here we are. Again, everything is right here on this interface, but we're still going to show, right? So again, your debits right here, your credits right here, and we depicted it. Save and new. Uh-oh, let's go back for a second, right? The date. So let's correct it. We left the old date. Again, pay attention to the dates. Save and new. Again, it's going to ask us, do we want to save the changes? Yes, we do. All right, and we have one more. Our draw, 525. So right here. Again, it's very much identical to the other draws. Our bank account is reduced by 3,000. And our equity account is reduced by 3,000 as well. Right here. All right, we're good to go. Debits and credits are in balance for this one. And we have merchant fees to book as well. So we're going to save and review. All right, one more thing. So on 28th, we have our merchant fees. All right. So again, our bank account is reduced. Alright, so what's happening here? Our bank account is credited. It's pretty obvious from this interface. And our expense account is debited. So what's happening here? Our expenses go up when debited. So our merchant account fees expense goes up, 61,500. And our bank account is reduced by the same amount, right? Because we're paying it out of our bank account right here. So 11,100 is credited and therefore is reduced. So save and close. That's the last one we need to post. All right. So we're going back to our reconciliation and we can see that these amounts are now showing up. And we have zero difference, which means we did a good job reconciling and bookkeeping. Everything is in agreement. We're going to click reconcile now. All right, we're going to print reports. Well, in this case, we're going to just display them. Let's make sure that our balances still coincide. Yes, they do. Everything is identical. Good. You can print it for your records and then attach it to the bank statements. That's what I typically do. And then this is the detailed. Again, let's make sure our deposits, yep, they're all here. And then our charges, they're all right here too. So now again, we can print the detailed reconciliation, attach it to the bank statement. We're good to go. That concludes reconciliation of our bank account for the month of May.